Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst, part of MarketSmith India team. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. This is a standard disclaimer across our webinars, podcasts, and seminars which we do. Before we go ahead, let's analyze Nifty's daily chart. It is very important to understand Nifty's price volume action on daily basis to gauge the market, how it is placed at the current moment, and also have a view on the market to in the short term period around 1 week or so. We have seen a sharp selling in the Nifty from all-time high around 26,200 level. The last 2 months, Nifty has been under selling pressure consistently. It has started to fall, and in this process, it started to breach its key moving averages, and all four key moving averages which we track have been breached by the index. 200 DMA, which has been a very good support historically, has also been breached by the index. However, within a period of short time, around 3 to 4 trading sessions, that level has been reclaimed by the index, showing a strength in the Indian market. And recently, we have seen a very good action on the Nifty, especially this long blue bar. Both the price and volume action have been very good on that particular day, and the process it reclaimed its 21 DM as well. And yesterday action was very bearish, I could say. After 3 days of muted action, trading in a very narrow range, Nifty found volatile moves yesterday. That is, the momentum has been on the downside, and it breached its 21 DMA again. So going forward, as long as Nifty stays below these 50 and 100 DMAs, we might see action like these where Nifty moving higher for a couple of sessions and falling in the next session, and we might see consolidation around these two levels, that is 200 DMA and 100 DMA. Nifty might consolidate in this region going forward, and to find a positive momentum, we would like the Nifty index to reclaim 1500 DMS, which are very close to each other at the current moment. So, if those two levels are taken by the index, definitely we will see buying, fresh buying happening in the markets and taking Nifty to new all-time highs again. And the downside of 200 EMA is going to be a crucial level for the index. If that level is breached, we might see uh, bearish overall bearish momentum in the markets. For the key news section, KEI Industries has raised 2,000 crores of rupees through allocation of its equity shares to 104 qualified institutional buyers at a issue price of 3,800 rupees per share. Newgen Software Technologies has received an order from RBI to implement and maintain regulatory application management system, which is RAMS in the technical terms. So the overall order value is estimated at 32.4 crores of rupees. Sindhu Valley Technologies has received couple of contracts. So both of them are subcontracts, and one of the contract is at 38 crores of rupees from GHV India for the construction of road work in Maharashtra. Another subcontract includes 125 crores of value, and this is from GHV MHK JV in Gujarat. Yesterday's institutional activity, if you look at FIS have sold at record levels, they have sold more than 11,000 crores of Indian equities. We can attribute this sharp selling by the FIS to the yesterday's sharp sell-off in the Indian markets. Domestic institutional investors have tried to give support for the Indian markets. They have bought more than 8,700 crores of Indian equities. That was not enough for the markets to hold on. Overall, FIS exiting the Indian market has been the theme for the last 2 months, and there are a couple of factors which are the factors for FIS exiting India. Mostly, the US the dollar index has strengthened and broadly, and uh, China has become more attractive for the investments purpose as well. So overall, these are the major factors which are favoring FIS to exit India. But as long as India's growth story remains intact, we might see FIS coming back to the Indian markets in the coming months. For the global market update, US market was closed yesterday because of Thanksgiving week. And Asian markets, as we speak, are trading mixed. Shanghai is trading with a gain of 0.5%, whereas Nikkei and Kospi are trading with a decline of 0.4 and 1.8% respectively as we speak. So overall, not much on the global cues. So let's look into GIFT Nifty, what it is suggesting for the Indian markets. It is trading at 24,100, about 24,100. So clearly, a positive opening is expected. Yesterday, Nifty closed below 24,000 level. So opening about 24,000 and Nifty holding on to its 21 DMA is a very crucial for the longs. But for the on the downside, if the 21 DMA is not reclaimed, we might see further selling in the markets. For the chart of the day, we picked Zomato, and recently we changed the market status to rally attempt as well, complying with O'Neill's methodology rules. And we started to add and pick stocks which are looking good and forming good base patterns. Zomato is one stock which is looking very good in terms of ratings. EPS is at 80, price strength at 86, and ABD rating is at A minus. So both all the three ratings have been very strong. Chart is also looking very good. It is 4% to the pivot. The base formation has been ideal, and the only concern is it's a late stage base. It's a stage 5 base breakout, and mostly these late stage bases are typically will not be successful. And given the market scenario, which is not looking good, also, so not it is better to look for earlier stage base breakouts rather than going for late stage bases. We are not advising here to take a fresh position, but we are just analyzing from the owner's perspective. Number of funds section is also looking very good for the company. It has been able to attract new funds consistently for the last 4 to 5 quarters. Overall, it's a very good story, and the technical ratings have also been very good for the company. Thanks for joining today's people. Have a good trading session.